Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the SGX Nifty is indicating we'll have a flat start. That's of course the futures rate, which is trading at 27-point premium. So you adjust that and spot opening somewhere around that 11,400 mark. We closed at 11,389 yesterday, of course. Ashwani Gujral, Sudarshan, Sukhani and Mitesh Thakkar with us now. Good morning, Ashwani. Thoughts on the index first. For 2 days, we have seen opening is very close to the high point. But is there a trade on the Nifty and the Bank Nifty?
Well, good morning. We're sitting on top of a rally and you are getting these narrow range bars. Day before also, if you leave out the first 15-minute surge, the day was narrow. Today, yesterday also narrow. So there is a bit of a problem here, and I wouldn't be surprised if we start moving sideways. So the idea is to trade the boundaries, but I would be much more interested in case the lower boundary starts to get taken out for a trending day. I don't think we can stay in a narrow range for too many more sessions. So sooner or later, I would think some amount of profit booking should start. Obviously, if we break on the upside, I'm not taking that trade. So I'm looking either for sideways or for a downside.
Okay, looking for a sideways or a downside. Sudarshan Sukhani also joins in. Sudarshan, do you reckon that we could be in for a few days of consolidation, or do you also think that some nervousness could creep in?
Good morning. Well, I think this is already part of a consolidation. So you're right. We should be ready for some more of this. The markets will decide for how many days. But I don't sense any nervousness. This is a consolidation which is natural. After a big rally, markets always consolidate. So this is nothing new. This consolidation is coming after a rally, and I assume that the breakout will also be on the upside. Inside any consolidation, it becomes difficult to trade, but the trade should only be on one side, according to me, and that is on the long side. So if there is a minor dip towards 11,400, that's the futures rate this time. So about 25 points from where we perhaps should open. That dip is an intraday buying opportunity, and if the markets close well, then you carry this position. But I would not look to short this consolidation in any way. I'm a buyer.
Okay, so remaining on the buying side, that's Sudarshan's call for the day. Morning, Mitesh. Which way would you go?
Yeah, good morning, Surabhi. I think the idea is to be trading more on the long side, but I've been calling for a consolidation given the fact that we have had a good rally of about 500 points over the last 2.5 weeks. Also, the fact that the intraday indicators are now slightly softening up. So maybe, a couple of days of consolidation, you might get a 70-80 point kind of a dip during that period. But we will still advocate trading more on the long side, and I think use any kind of dips to buy into the markets on trading side. So clearly trade with more of long bias. The breadth is still promising and still suggests that there could be more upsides happening in the near future. But yes, there could be a 3-4 day kind of a breather.
Okay. Ashwani, contours on trades for the Bank Nifty. Also, because yesterday we saw PNB's reversal. There were a couple of other stocks where you saw some reversal. Axis Bank, for example. Thoughts on the big banks?
Well, I think more consolidation could be likely, and corporate banks have run up. Now bears will try to take the corporate banks lower, and if they fail, I think the second leg of the move could be sharper. So my sense is that corporate banks could go through a bit of a correction. So let's see how strong that correction is. But overall, they shouldn't be bought just yet. You need some sideways action, some testing of support. All of this, if it can coincide with again going back to 11,250, 270, would really play out well, and the market would have become stronger by that. Having said that, individual stocks, Piramal Enterprise is a buy with a stop of 28.90, target of 29.60. Dabur is a buy with a stop of 438, target of 454. Bajaj Finance is a buy with a stop of 27.30, target of 28.10. And Titan is a buy with a stop of 920, target of 955. HDFC Bank could be bought with a stop of 2100, target of 2175.
Okay, so a lot of the stocks that you've picked up are names that are hitting new highs, names like Dabur, Bajaj Finance, etc. So let's see what's on Sudarshan's radar. Sudarshan, you have 3 buy calls and 2 sell calls today?
Well, yes, because that's just to respect the consolidating nature of the market. Always, I will be focusing more on the buys. Vedant is a buying opportunity. That stock has gone through a bear market. It's now finding some kind of support at lower levels repeatedly. It's a buy for a while. There's a lot of talk of Hindalco. I think this is a better opportunity here. It's a day trade, intraday trade. It's also a positional trade if you want to start building positions here. So Vedant is a buy. Siemens is a buy. That stock has been in the dumps but is now coming out of that. So we are looking at stocks that have now started entering their own bull markets. There is clearly much more upside there. Finally, Exide is a buy. Same story, big decline, base building, now a renewed rally. This rally should take it to new highs. So there are 3 buying opportunities. All 3 are day trading, intraday and positional trades, all in both the classifications. I have Raymond's as a short sell. Quickly, Raymond, Century and Bombay Dyeing had only stories behind them. Some real estate deal will come and then the shareholder will be rewarded handsomely. And stories never last. So see the other 2 also. Raymond's is a short sell and unfortunately Infratel is a short sell. This is not a story, it's a real business, but it's not working well.
I guess because the parent sector has had enough issues, and with consolidation, the number of towers people need have dwindled in the past. Anyway, that's on the rationale of the reasoning side. Let's get to more calls. Mitesh, I see more buys than sells on your list as well.
Yeah, that's right. I have a solitary sell compared to 4 buy calls, and Bajaj Finance features on my list as well. It's doing a good consolidation, 2760, 2680 types, and a breakout about 2765 should be a good buying opportunity. So buy about 2765, keep a stop at 2744. Look for a first target of 2840. Cummins had a good candlestick pattern 3 days back and then gave a 2-day kind of a pullback. Now very good risk-reward equation can be made over here. So that's a buy with a stop at 674. Look for 705 as your target. India Cement is showing signs of continuation on the upside. That's a buy as well. Keep a stop at 118.8. Look for targets of 129. The solitary sell call is on Tata Chemicals, which is broken down on the intraday chart. So sell with a stop at 682 for targets of 642. And Tata Steel is my final buy call. That's a buy with a stop at 562 for targets of 599.
Okay, gentlemen, thanks a lot for that. Well, we're also going to discuss the auto space. We had lots of companies coming out with numbers yesterday: TVS Motor, Motherson Sumi, M&M, and this week as well, you have Eicher Motors that will be detailing its numbers. We have the new axle load norms, so much to talk about. Hitesh Goyal of Kotak, who tracks this sector, joins in now. Hitesh, hi, good morning. I wanted to start by asking you about Mahindra & Mahindra because the company yesterday raised its FY19 tractor guidance to 12 to 14%. What's your take on how to approach the stock here on? How did you like the numbers?
Yeah, hi, good morning.
Hi.
Yeah, so numbers were pretty good. Their guidance also on tractors was pretty strong. I think they have clearly indicated that in FY19, their LCV volumes and tractor will remain very strong. Now the focus will be on the new launches on the SUV segment, which is expected. First MPV launch is in September, and followed by one in Diwali and one after Diwali. So that will be focus now. I think tractor numbers are already factored in our assumptions.
Okay. Hitesh, I want to talk to you about the market's reaction to TVS Motors as well. There seems to be, there was a little bit of maybe relief rally because at least sequentially those margins look better. Now, once again, the management said they will get to double-digit margins, but didn't say when. What would your view be on the stock?
Yeah, I think I could not figure out why the stock went up yesterday, because if you look at the gross margins actually have been deteriorating for quite some time because of raw material cost pressure and lack of pricing power, which we have been highlighting. The margins were supported by cut in marketing costs, which is not sustainable because you will see competition only intensifying in this segment. Hero is going to launch their 125cc scooter shortly, which will put pressure on TVS. If you look at last few months' numbers as well, Jupiter numbers have been flat, and only the new launch Ntorq is supporting the numbers on the scooter side. Even in 1Q FY19, we would highlight that actually the market share for TVS in domestic two-wheeler segment has gone down by 90 basis points YOY. So I don't know why this enthusiasm is there in the stock. I don't believe that margins can improve substantially from these levels, because we believe that FY20 and FY21 could be challenging years for two-wheeler because of the cost increases which are going to happen because of the regulation changes. So I think street numbers will be cut even more going forward.
Okay, so street numbers will be cut even more. FY20 and FY21 could be challenging for the sector. Just stepping away from results for a bit, I wanted to ask you your views on the new axle load norms. There was one amendment yesterday on a certain category of trucks, but in general, how are you approaching names like Ashok Leyland, etc.? Has all the confusion been done away with the latest gazette, or is there more clarity that's needed?
See, clarity has come in definitely that the amendment will be, applicable on existing trucks as well now. But the issue is that nobody knows what is the extent of overloading in the industry and how strict government will be in curtailing the overloading which is prevalent in the industry. If government is very strict, like they were in UP market, where we saw 68% growth in truck demand last year because of ban on overloading, actually the truck demand can go up significantly. But there is no data to rely on to really get a hang on overloading happening in the industry. So that is the challenge right now. I think near term the fleet operators will assess the situation, so they may not buy immediately. So I think August may be weak, but we'll have to see how September pans out.
Hitesh, finally, one more confusing number yesterday was Motherson, because there's so much of restatement of accounts because of Ind AS 115. Mr. Sehgal said everything is going well in the underlying business. How did you read the numbers?
So I think numbers are very weak. If you look, you have to see the EBITDA. Actually, consolidated EBITDA grew by 19%, but this was largely led by INR depreciation versus euro. Otherwise, if you look at excluding INR depreciation, your consolidated EBITDA growth would be only 9-10%. So my sense is that the numbers by the street has been cut consistently, which is also reflected in the stock price. Stock price has come down because of that, and the automotive industry globally is not growing much. So yes, I mean, company is gaining market share. SMR PBV growth was around 10%, adjusted for the accounting changes that you're talking about in euro terms. So they are definitely gaining market share. But our contention has always been that margin improvement story, which street is building, it may not come through in SMR PV, which is the reason why we have a sell on the stock. Okay,
you have a sell on the stock. What are your top buys now?
Our top buy is M&M, Escorts, Tata Motors, and Apollo Tyres.
Okay, Hitesh, we leave it at that. Thank you for stopping by and analysing all of those numbers for us. So that's the word coming in on a whole host of auto numbers that came out. We'll take a short break. Up next, we have about less than half an hour to go before the pre-opening rates kick in. Vinod Sharma of HDFC Securities will be with... Okay, we are counting down to the pre-opening rates and the SGX Nifty is absolutely flat. Vinod Sharma of HDFC Securities is here with us to decode how to approach the trading day. Hi, Vinod. Good morning. First, on the index itself, do you reckon that we could be headed for a few days of consolidation, or you think this is just the stepping stone to the next level on the upside?
I think that is definitely on the consolidation path, and therefore the upward breakout will be there, but after some consolidation. So since I have a flight to catch, I'm just going off directly to my stocks. Sorry, Sonia. Hindalco is on my buy list. I'm buying the 225 call at 7, stop loss at 5, target of around 11. Obviously, one has to get out before the results that are there on the 10th, but probably the good news on Canadian subsidiary may help. Tata Steel, I'm suggesting to construct a bull spread here, where you buy the 580 call and sell the 620 call. Your cost would come to around 13 and possible profit is around 27. This stock has broken out, but since there was a 4% rise, I think one will need some more time before one actually books profit here. So a bull spread is definitely on the cards for the entire series. I have Bajaj Finance, another Nifty stock coming up. Obviously, I'm not new because there are other calls which have already been given. This is a stock which has continuously been seen profit booking and therefore has the ability to still go further up. I'm buying the 2750 call at 80, stop loss at 50 and target of around 130. In case of Dabur, which is a non-Nifty stock, I'm still seeing buying coming in. So I'm buying the 82, in case of Dabur, I'm buying the 445 call at 10, stop loss at 7 and a target around 15. And Maruti is my last call, again a large cap and a part of the Nifty. I've seen 9% OI being added in the current series, 4% the stock is up. Yesterday it was marginally up by 1%. So I'm buying the 9,500 call here at around 127, stop loss at 80 and target around 130.
All right, Vinod, thanks a lot for your time and have a good flight. Because S. Pitulsen of spitulsen.com is with us now. Mr. Pitulsen, good morning. I first wanted your thoughts on SRF. If you studied the numbers and the stock has had a rally already, but is this still a good investment?
Anuj, I think numbers are seen to be quite good, and if I take a YOY also, if I take a QOQ also, because there has been phenomenal increase on a YOY basis, but even if I take on QOQ basis, I think the two segments have really performed very well, that is technical textiles and film packaging business. And apart from that, if you really see the PBT of 182 crore against 163 crore on a sequential basis, this is after we need to adjust the forex losses, which is seen at about 15 crore in this Q1 against positive, that is gain of about 11 crores in Q4. So if you make the adjustment of this, the PBT works out at 197 crores against maybe 150 crores. So I think the numbers are seen to be excellent. PAT of about 134 crore against 125 crore after these forex losses, forex adjustments is really seen quite good, and EPS of 23.30 will really cheer the market. So we are keeping extremely positive. I won't be surprised to see the share moving up by about 150 rupees in the next 1 week or so, or maybe in this series itself.
Mr. Tulsen, so some sugar numbers have been coming in. For instance, Dhampur came out. Now, on the sugar side, I think the losses are at least contracting. Should that be seen as a positive at all? And to tie in, I mean, there was some talks about domestic prices firming up slightly to, I think, about 32 thereabouts. How should one look at a number like Dhampur and some of its other peers?
So if you really see the numbers first overall, I think the cogen and the distillery, that is molasses segment, are really seen giving them very good profits. Coming on sugar, yes, in fact, if you take any numbers, it has started with the Triveni Engineering at that point of time also I've said, and with Dalmia Bharat, Dwarikesh and the Dhampurs and all. What has happened that in the month of March, all these stocks inventory have been provided for at a valuation of about 25 to 27 rupees or maybe 26 to 27 rupees, and that is getting reversed in this quarter. So and apart from that, because of the quota mechanism having levied, the sugar prices have firmed up quite high, maybe 32, 33 rupees in UP for this quarter, which has given them a good advantage. So I don't think that this should really get extrapolated. Maybe for next 3-4 months things are going to remain positive on the commodity front. Prices are not going to fall because now there is no crushing pan-India, and you will be seeing the inventory getting liquidated, and if this quota mechanism remains, then that will be seen quite positive. Again, on the export front, we have not seen much relief coming in. 2 million ton exports have just seen an export of maybe about 4 lakh ton as of now. So that will also be giving good relief. So yes, I agree that the sugar segment has not been seen as howler, but that is because of the inventory again getting valued, because obviously the stocks at every quarter gets valued at cost price or market price, whichever is lower. So that is the relief coming in, but I won't be taking this as an investment call, because the next season, the crushing season, which will start from the October, we'll again see the increased production by maybe about 10 to 12% or 12 to 15%, and that will keep the margins, pressure on margins continuing. So use this rally in the sugar stocks as an exit opportunity if you have a long-term view. If you want to remain invested for the near term, probably one quarter results may also be factored in for the investors to remain invested.
Okay. Mr. Tulsen, good morning. The other set of numbers I wanted to discuss with you was from Edelweiss. The headline numbers looked good, revenue growth of 18%, profit growth of almost 18%, but there was some disappointment as far as the bottom line is concerned. This stock has been, a big wealth creator in the past. Do you see it resume its uptrend at any point in time, courtesy these numbers?
See, Sonia, if you really ask me, I have not seen any disappointment except for insurance segments where the losses have increased to about 80 crores on the EBIT basis against 43 crore. Again, I am referring on a YOY basis. And if you really take their NBFC core business, that has shown a respectable growth. So taking the overall numbers into consideration with EPS of 3 rupees and the kind of growth which we are seeing continuing for the company, with PBT of about 418 crore, one can argue that the things are not seen to be giving that kind of growth. So I won't say that the numbers are really exciting, but the insurance EBIT of the losses of about 80 crores has really made the things looking little flattish kind of things.
Mr. Tulsian, I want to revisit the Motherson numbers with you, sir. We did speak about them last afternoon as well, but now you would have had some more time to perhaps go through. Now, yesterday when we spoke to Mr. Sehgal, he was still very optimistic. But some analysts are pointing out that if you, don't look at the top line because of Ind AS, look at just the EBITDA performance, there is a margin issue that's building up. How do you view the stock and the performance?
See, honestly, I don't find any issues with the margin also. If I come on SMR, yes, the rear view mirror business, Mr. Sehgal has said that the things are seen, maybe peaking out, but we will maintain the margins. Comes on the wiring harness business, that is of the PKC, that segment has really shown excellent performance. And overall, even if I don't take the top line, which the management has given by way of a footnote, that don't look for the top line growth of 11% because of the accounting treatment. Take that as if the treatment would not have been given. We have seen the growth of 24% in the top line, with EBITDA also growing 24%. So I don't understand where is the pressure on the margin if we exclude if we overrule, because this accounting treatment or change in accounting norms are going to give the jerk, which we have been seeing in a great way in real estate company. And coming on the profitability front, PAT has seen a growth of about 70% on a YOY basis, and that's the right way. And if you really see, as I say, that if you have, maybe, one may argue that SMR is seen peaking out, but that will get picked out at some level. And as I said, that wiring harness business of PKC is really doing extremely well, and that has a great potential even in the Indian market. I agree that Indian pie is very small for the company, compared to the global pies. And apart from that, the contribution from the 21 plants which have been completed in 9 countries, that will start yielding the gains. So honestly, in fact, yesterday also I've said in the afternoon show, having analyzed at that point of time also, that I'm extremely happy with the numbers having posted by the company, and I don't see any reason. If you start taking a microscopic look and if you magnify many particular segments, you may have disappointment. But honestly, one may say that SMR is flattening out because of, but as I said, that in rear view mirror business also you have seen the peaking out of the margins, not the peak, not the margin seen coming down, and SMP as such is doing quite well. So overall, if you see broadly, standalone numbers and all 3 segments are really seen to be have given satisfactory performance on the EBIT level.
Mr. Tulsian, oil marketing companies will announce numbers. Today we have HP and BP. Your thoughts on how to approach these stocks?
See, Anuj, maybe, firstly, we will see some kind of pressure on their core business, that is gross refining margin, because of the reduction in Singapore benchmark by about $1, and we have seen that happening in case of Reliance also, GRM having fallen by $0.50. So I won't be surprised to see that GRM falling maybe by 70.7 to $1 per barrel for these oil marketing companies, and maybe there will be some kind of marketing pressures, marketing margin pressures, though I'm not very concerned on those things overall, because that contributes just 25% of their total this thing. So overall, one may say that the flattish kind of performance will be looked up, will be seen from all 3 oil marketing companies.
All right, Mr. Tulsian, just stay on. We have a couple of earnings to analyze, so we'll come back to you in a bit. Mercator, that company has posted a disappointing set this time. The net loss has widened to 46 crores. Revenues too are down about 28% this time. The only silver lining appears to be the expansion in the margins for the company. Shalabh Mittal, the MD and CEO of Mercator Lines, joins us on the phone line to talk about that. Mr. Mittal, thanks so much for joining us. Before I ask you about the earnings, I just wanted to know a little bit about the demerger of the business. You had spoken earlier that you're looking at restructuring of the shipping and the dredging business into a separate entity. Any kind of timeline that you're looking at?
Yeah, good morning. On the dredging business, we have a strong bidding pipeline. So the idea there is that once we have a stronger order book, I think that would make a better timing for us to demerger. In terms of the process that is going on, in terms of the legal process going on.
So you're not looking at any demerger within this calendar year itself?
So it could very well happen. I think the timing earlier was October. I think that'll get pushed up for sure. But I think we are still looking at somewhere, I think maybe end of the financial year. But the timing would depend also on the order book coming in.
Okay, so you're looking at a demerger of the dredging business by the end of this financial year. Tell us a little bit about the business verticals itself. I mean, this time around, your revenues have fallen almost 30%. The losses have gone up to almost 46 crores. Where's the key pain point and what is the expectation going ahead?
Actually, revenue, if you compare with Q4, has gone up 63%. So it's a very healthy sequentially going up. The company has been in the transformation phase for the last 1.5 years. So if you see sequentially, I think the company is done extremely well. 63% up in operating income. Our EBITDA margins have doubled from 15% to 32%. If you look at segment-wise, coal revenues have gone up almost 5 times, more than 5 times compared to Q4. Of course, there was a disruption in coal business, which now is completely back on track. Other segments, dredging, I think if you compare it to last quarter, because this is a seasonal business, versus the EBITDA loss of last year of 6.9 crores, we've shown an EBITDA of 8.9 crores this year. Again, a healthy jump there. Shipping, of course, has dropped in terms of comparison, but the margins are healthy. There's more than 50% EBITDA margins there. And the numbers, revenue and EBITDA have dropped only because we've sold 3 ships, not for any other reason. So overall, the performance, in our view, has been extremely satisfactory. Of course, a big change coming in the business is, as we've announced yesterday, is the starting of our oil business. So we do expect the sales to commence within August. And obviously, with time, once we start scaling up, this oil business itself will become the biggest business for Mercator.
Can you give us some more details on the scale-up plan, Shalabh? So the numbers start flowing in from August at the end of FY19 and rather at the end of FY20. What's the revenue contribution we should expect from oil?
So I think from oil, the scale-up plan is the production. The sales will start in August. We do plan to increase the production to the targeted number of 5,500 barrels a day, which should happen by December or Jan. And of course, the full benefit of that will come in March 20. But within this year itself, we are expecting 60 to 70 crores of EBITDA from oil itself. March 20, you would see close to 220 crores of EBITDA from oil.
Okay. Are you confident of hitting this FY19 guidance of about 1,300 crores of revenues? Because that would mean a growth of almost 34% compared to FY18. And the first quarter has not been too kind to you. So would you want to scale down your guidance in any way?
You see, what happens is that there are a few things which are happening in second half for us, basis which the guidance are made. One is the oil business, as I said, will scale up from here on, and the big jump comes in the last quarter. Coal as well, while the numbers are extremely healthy, we do expect to increase our production in the last quarter. Plans are being made for that, as well as the contribution of higher quality coal, where the margins are higher. So that will also contribute significantly more in the second half. Dredging anyway seasonally tends to be much better in the second half. So I think taking all this together, the second half definitely would be significantly better than the first half for us.
So not scaling down the guidance anywhere, neither margin, top line, profits, nothing, right?
Not as of now.
Okay, Shalabh, we'll leave it on that note. Thank you very much for joining in. Quick break on that note.